Bitcoin crashes on Friday and it's Christmas time. What's up, everybody? This is Bubba's Bottom Line, our weekly edition, and of course, we saw some dramatic action in Bitcoin Friday, and all of the pundits who said that it's a bubble and it's going to crash. Certainly, there it was, crashing down, trading down into the 10,000s. But I think one of the things that we're missing here is that the products that move, like the Bitcoin, move like that on both sides. Not just, they don't just go up like that, they go down like that as well. The same as the equity markets will do when the equity markets go down. This is not a not normal thing. This is something that happens all the time. We just always seem to forget that markets make crazy moves when they make them. Now, is it the end of Bitcoin, or is it still just the beginning? Well, there are reasons to believe that the end of the Bitcoin part of it is over. But as we have said from the beginning, is that Bitcoin, it may not be Bitcoin, but the cryptocurrency world is here to stay. Now, a couple of the issues with Bitcoin are the transaction cost. So that's a problem. When you have to pay a $17 fee, it does take the change of going to McDonald's and getting a value meal for a hamburger for $1. Okay, but the overall technology, the overall space is going to exist. And I'm not saying this is over yet, and I'm not saying that that can't be fixed. However, the cryptocurrency space, I believe, is here to stay. And there's going to be meltdowns, there's going to be collapses. There are many flaws in the system in the way that you have to even deal with it. So, when you deal through Coinbase, you put your money in, you can't use it right away. So they're taking your cash immediately, but you can't function right away. So we'll see how it trades out. Again, I don't think that the cryptocurrency world is over. I think that the cryptocurrency world is just beginning. And certainly, I'll be looking to buy some, even myself, which from somebody who 6 years ago was dead set against it, I now understand it better and think it's the real deal. But let's talk a little bit about Rosie O'Donnell trying to bribe some senators for $2 million to vote no. Now, again, I don't know all the factual information of that, but I think it's kind of interesting that it would even come out. And of course, I guess her and Ben Shapiro got into it pretty good. And, what do you think about that? I mean, this is the amazing thing I find out, and I find about what's going on, is we want people, not we, I don't, we want people want Donald Trump, President Donald Trump, to fail. And so far, all he has done is done almost everything he promised, with the exception of the term limits. So are we really sitting here cheering on or encouraging these people who want this country to fail? Kind of stupid, if you ask me. I mean, I don't get it. I mean, Rosie O'Donnell's kind of a dope anyway. So where are we coming from with these ridiculous things? In the meantime, the tax plan did pass. President Trump did sign it on Friday into law. And of course, again, I think there's a lot of warts on this plan. I think there's a lot of problems with this plan, but it is a start. All right, and we've seen some of the action. And I think one of the reasons you've seen a continued rally in the stock markets is because you are starting to see companies actually try to spend some money. Now, I don't think that this has solved all the problems. I still believe that the economy has some major flaws and there's major problems here. Now, again, the very wealthy, they don't get to feel those flaws. A couple of the states around the globe don't feel those flaws. But when you start to see and understand that right now, what are we seeing? We're seeing spending is more than what we're taking in again. So we're now overspending again, creating even more massive debt to a system that is already debt-ridden. Okay, so if you don't think that the housing bubble was big enough with the debt today is about twice the size. So here we are once again up against that course. And will it happen again that the banks will be too big to fail again? And will we have to end up bailing out the banks again? I think that is something that really becomes of interest, when you're looking at the market, because again, I know that long term, I'm a big believer in America. I know that long term, the stock markets are going to go up probably 8% year over year, which is about the average in history. However, I also know that there's going to be a major meltdown, once again, trapping the unsuspecting investors that don't really want to be in, but are being forced into the market. And that's the thing, when you see people forced in and pigeonholed into only one investment class, I think that brings a problem. And I think what nobody else is talking about, but my friend Danielle DiMartino Booth talked about, who used to work for the Fed, said that her concerns are what's going on in Europe. They are now purchasing and owning junk bonds, or bonds that have been downgraded to junk status. She thinks, on her opinion, is that may create the backwards effect of the housing bubble, that when we had the big problems in 2008, we spread the problem around the globe. She thinks it may be the other side of the way, the coming back in the other way. And I would have no doubt that she might be correct there. But at the end of the day, that is something that we've talked about long before this, is that the way that the central banks are operating around the globe is truly a travesty and will lead to a tragedy, because you cannot continue to run a legalized Ponzi scheme by printing new money to satisfy all debt and thinking that it's eventually going to go away. We know that the debt is not going to go away. We know that there's going to be some major issues in here. And I think you're also starting to see show up a little bit in Canada, where now housing is the least affordable it's been in 25 years, because of course they're buying up the homes. You know, cheap money brings all these things out, brings out more debt, because what happens is most of us go back to, well, how much is it by the month? That's all I care about. If I can afford it by the month, I'm in, right? And that is not the way that life should be. This goes into this whole holiday season. You know, the holiday season is always overspent, always creates over debt. And of course, usually in good times, we make enough money that at least we can pay our way out of it. But again, I'm worried about this one going to be another problem. And I'm believing that you're going to see a lot of retail bankruptcies when the new year begins. I'm going to believe you're going to see a lot of other problems. And I still want to see the repatriation of this money, and I want to see it actually go to work, not going into buybacks and buying back your stock and making the CEOs rich, but actually going back into the capital X spending, or CapEx spending as it's called, to see some real growth. Again, we have horrible jobs. You can tell me whatever you want. The jobs are horrible, all right? We're not paying enough money. Now, we've had a couple of companies jump up to that $15 an hour wage, but until you solve the healthcare problem, all right, then the $15 an hour it doesn't mean a lot. All right? This is, again, something that we seem to miss out on, is if I'm paying so much for my healthcare, I can't afford it, and my employer is no longer paying for it, which they don't want to pay for it, it becomes a much bigger problem. And these are things that we continue to ignore as the stock market continues to go higher. Now, last week in the markets, they were moderate, right? They weren't up, they weren't down, they were kind of flat, which is no major expectation. But I think one of the things that was very interesting in last week's trade is that each and every day, I believe they opened much stronger, only to be weaker during the rest of the day. You know, what does that mean? It doesn't mean, right now it doesn't mean a lot. We're still very near the all-time highs. But what it does mean that there is some more possible willingness to sell it. I think when you look at the volatility index, the VIX actually, it was down towards its bottom, but actually was trying to rally in a couple of those days that the markets were rallying. So, you know, there's a lot of things happening out there that don't look great. And of course, investors continue to forgive the issues that show up. And I think there is no more perfect of an example than what happened with Apple last week. Apple made an all-time new high again last week. And out came a news item on Apple that they were intentionally slowing down the older iPhones to create people to come in and buy new phones. Now, normally you would have thought that something like that would have caused a major sell-off in a stock, and it did not. In fact, Apple held up remarkably well and actually rallied. So again, are we back in that internet time where it just doesn't matter anymore? You know, a company changed its name. I think it was Long Island Iced Tea, I believe, whatever their whole name was. But they threw blockchain in the middle of that, and the stock went soaring. All right, so are we back in that .com era where if you put a .com after your name, it goes flying? And I think this is these are just warning signs. It doesn't mean that the market collapse is coming tomorrow or the market correction. What it means is that we're starting to see people that have no idea why they're buying something. They have no idea what they're doing. They see a name, they jump in. All right. Now, we saw the Bitcoin stocks last week get clobbered. You see Riot down about 25 bucks, about 50%. Grow, Mara, all of them. The only one, and this is another interesting thing to take a look at, NVIDIA is also very much tied to Bitcoin, but that really did not fall. So you have to wonder how all this is starting to play out. Now, the entire globe is setting up for another monetary crash, another big fall. And of course, they've done nothing to help avoid that. And that again goes back to my original problem, is until you create good jobs, until you create a working force, and until you let the small business re-participate in the economy, you're going to have these problems that are always going to be lurking out there. Because again, without the small business, and that's where I think the tax plan really blew it, is because they did not, although they lowered the small business taxes, but they also lowered big business taxes, and they did not bring back a competitive edge where a small business can compete with a big business. And that, I think, is the travesty here. This is where we find out the real problems, because the whole world is built, or should be built, on free markets and competition, which I think that is something that we saw eliminated, and even more so now with the new tax plan. Because again, the way that dynamics work of a business, you know, we all have to buy supplies. Well, the big company can buy a lot cheaper. If the big company is paying less taxes, buying supplies cheaper, and getting their help cheaper, then they have an unfair advantage if I'm manufacturing the same product. That takes away the true competitive spirit, the true competitive market, which is a problem. That's the same thing I see in Amazon right now. And that was always the concern with Walmart years ago, is that they make prices so cheap, they put everybody else in business. So that becomes an issue that I think we need to obviously eventually address. Now, hopefully a lot of these things will come out, but again, a good, solid, healthy correction would not be a major issue in the markets to begin with. They're supposed to correct. We're not supposed to go straight up, okay? Rebuilding brings more strength back into the markets when it's done. Now, they've tried to cap interest rates. They've tried to cap everything else, but we're starting to see some of the things that the central banks and the Fed were manipulating may be starting to get away from them. Now, again, I'm not predicting a market sell. This week, I'm certainly not predicting anything. This week, I'm telling you, if you're smart, you'll take the week off, okay? Because trading this week will be probably at a total standstill, barring any major black swan event. And of course, we cannot time a black swan event, but I would not expect to see one. So if we're going to continue to watch the markets, again, I'm saying that this is a great week not to even participate. It's a great week to sit back, relax, and enjoy it, because I don't see anything major. I mean, first of all, it's only a 4-day week because we don't start trading again until Tuesday. And then, of course, you know, by Thursday, or for sure Friday, there'll be nobody there. So you basically have Tuesday, Wednesday, maybe Thursday, if there's going to be any activity at all. Now, showing last week's action, we had no activity. We did see a major meltdown in the bonds. We did see a major rally in the metals. All right. Now, again, was the major rally because Bitcoin was collapsing or because gold was making a dead cat bounce? It could be a combination of both. There is no real way to know exactly why it was doing what it's doing, but I think there's a lot of signs that show that the gold was just a dead cat bounce, and that Bitcoin itself may be on its way out, and the new ones may be coming in, which would be Ethereum or the others. There's a lot of things going on underneath the surface that will certainly create some issues and some stories when we come into 2018. And speaking of 2018, next Saturday at 11:30 a.m. Eastern Time, I'll be doing a webinar. I'm putting together a trading plan for 2018. If you'd like to be a participant and come to it, all you have to do is shoot me an email at bubba@bubbatrading.com. I'll send you a link. And don't forget about my highschoolinvesting.com program. You know, we're trying to help educate our youth. And right now we're in 300 high schools. And of course, we want to continue to grow this. But at some point, which is now, I've decided that I no longer have enough capital to continue to support this because the schools pay nothing for it. Bubba pays for it all. And I have had some help, and I appreciate and thank all of you who've stepped in, and my friend Trader Jeff, and Melanie and Werner, and Rhonda, and a bunch of others, Ron Bond, and all of you people who've stepped up and helped. Hey, thank you so much. I appreciate it, but we need more. So go to patreon.com/Bubba Trading and help us out there. And in the meantime, don't forget to get the Bubba Show every single day from 2 to 3 Eastern Time at libertytalk.fm. And, and make sure that you have a great holiday as we step out of here for a break. And we'll be back with more of Bubba's Bottom Line right after the break. Welcome back to Bubba's Bottom Line. This is Todd Bubba Horwitz. And of course, it's I don't know if it's our Christmas edition, but of course, you guys know how I love Christmas and I love this time of year. And of course, don't expect a heck of a lot from the markets, and hopefully we'll have a continuation of a growing economy. Of course, I really don't see that. That's more of a fallacy in my opinion. I think this is one of the problems that is created when the overall pundits and cheerleaders and advisors continue to try to convince you and convince me that this market is different than any market in the past. And we do know something for a fact, that markets are never different, okay? There may be different reasons that we see things happen, but overall the markets are never different. And that's why you just saw the Bitcoin crash. Okay, that's why you'll see a stock market crash. Again, that's why you'll see an oil crash. Now, as we look around the world at some of the other asset classes that we do follow and that we do trade, oil continues to hover around, recent highs at the $58 level. But I think one of the things you have to notice about oil is the formation that it's in, and it's more in what we would call a backwardation formation, which means that the only reason oil is higher priced here is there's a little bit of fear in the short term, maybe some possible troubles in the Mideast, why it should bother us, I have no idea. I mean, other than from a human standpoint, but from a product standpoint, the United States has over a 200-year supply of oil here anyways. So I don't know why we would be so concerned about that, but that is part of the trading market. I think that you've seen potentially the lows in corn, the lows in wheat, and certainly I am a buyer and an owner. I'm a proud owner, okay, for corn futures and wheat futures. I think soybeans still have a little bit of trouble. I think that was a little bit of an ugly week last week. I think that we just had out on Friday the cattle on feed reports. Now somebody's got to explain this to me, okay? Why would a government report come out on a Friday afternoon after the markets are closed when people can sit on it for 2 to 3 days, in this case 3 days, and fester about the potential panic that they're creating? Because the report was very bearish. Now, I believe that it was already priced in, but why would they do that? What is the purpose of that? Companies, when they know they're going to have bad news, they try to get those markets that report out in the morning before the market opens so the market can relieve all that tension and trade it into a liquid market versus letting people get upset about it. Again, if you've noticed, most big sell-off days come on a Monday. Why? Because something happened the last week and on a Friday, and over the weekend, people just get themselves worked up into a frenzy that they got to sell, okay? So that, I think, is a tragedy at the way that they do that. I don't understand it. I think it makes absolutely zero sense. But in the meantime, I think the outside markets, the agricultural markets, I think are very good value here. I think that I would almost look at the grain markets as a great spot to step in, as almost like I was buying a stock for long term, okay? I think that's one of the problems. I think this whole inflation gig that the Fed continues to try to push their agenda on inflation is manure, all right? Now, I think it's gonna be interesting this year when the farmers go to planting season and they're gonna find out that the minute they plant, they're already losing money. I think that's another issue that we have not addressed. And of course, that goes back to the whole mechanism of the markets and where we are with interest rates and where we are with money and where we are with the new tax plan. So I think these are major problems that may create some heartburn over into the first of the year. Again, I don't think you're going to see anything now. I think as we go into 2018, I think that might be when you might see some problems here. Now, remember, the markets don't announce themselves when they're going to go down or when they're going to change, but I think there's a lot of reason to believe that we're getting very close to that overall push down. And I think that's something that becomes an overall problem. And when you look at, where the growth is attempting to come from, housing had some huge numbers. Who's buying all the houses? We really don't have the ability to borrow money, all right, as the middle class. So who's buying all the houses? Is it funds that are buying houses that are continuing to keep prices higher? Remember, if you can borrow money at 3%, okay, or 3.5% or 4%, all right, and you know that you can put out X amount of dollars on top of that right away, why wouldn't you? Again, I agree with it. I wish it was me doing it. And that's, I think, one of the big issues that is being created in this market today is that mirage that everything is so good, but if the quantity is not of the buyers, where we're seeing all these great housing numbers, new home starts, permits, blah, 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 all that stuff, if it's really just the commercials controlling it, what is it really saying to you? It's saying that the markets are being narrowed down to a lot fewer that have true ownership, and that the bigger funds are now using these properties that they're accumulating, even new homes, to go ahead and rent them out and create their own investment product. And I think that is something that is more to the reasonable thought process than we're seeing a lot of people going out and buying new homes. Because it appears to me, from my point of view, that the middle class is still in a great deal of jeopardy and is still not really totally recovered from the overall collapse. And of course, really what they're in line for now is just another collapse. And I think what's going to happen, as we continue to see retirement, as the system continues to, move people out and we don't have people to replace them with, all of these people, or a big majority of them, have all of their money tied up in equities. What are they going to do when the equities start to fall? Okay, that is an issue. And these are problems that are continuing to exist out there. So as much as we want to believe all of these great reports that are out there, remember, what happens to most reports? They get revised the next month. So they're not necessarily the truth when you see them. I think that is something that is a problem, as I drop my mic, but I think that is something that is a bigger problem, okay, in the world, that we don't always get a true report on what it actually means. And so if we're not getting the right information, and it's going to change anyways, why would we think that this time would be different? And this is, again, I go back to, if you look at the housing was great in October too, except now with the new report out, it's all been revised much lower. So are we getting information, or is the information meant to keep us mentally in tune that everything is okay? Because again, I personally can't say that everything is great. Okay, I don't see it, in my area, as I've used many times as an example, I don't see all the big jobs. I don't see all the people running out, getting these new jobs that they keep telling me that are out there. I think that, again, creates a problem that the government refuses to acknowledge. I think it's something that the Fed should be your key. If we truly have this great confidence, if we truly have all these housing sales, if we truly have A, B, and C and everything else that goes along with it, why can't interest rates go up? It's a logical question. Okay, if everything is as good as they say it is, why are interest rates still in nowhere land? Okay, the true market is if things are great, then the demand for money should be greater. If the demand for money should be greater, it should allow the rates to go higher, which would make the banks happy. All right, because the banks want to work on a spread. If you're not quite sure what I'm talking about, the banks borrow based on the Fed funding rate, and they want to make a spread in between that and what they can lend out at. And of course, when it was too narrow, there was no point to it. Remember, we used the example in the past that if the bank's borrowing at zero, but can get 2.5% from the United States government, or get 3.5% from me, where are they going to go? Well, they're going to go to the U.S. government, because that is guaranteed, as they say, by the full faith and credit. Whereas if they go to me, there's no guarantee, right? And that's something that, again, if consumer confidence is so great, if housing is so great, if manufacturing is so great, if the jobs are so good, if, then why have interest rates been unable to rise? Why is the Federal Reserve still waiting for inflation? We know why they are, because they need to pay back all that crappy money they printed. But the last question I have for you today is the Federal Reserve, okay, are they going under now? Are we going under a revolution right now, a financial revolution? Okay, and we'll talk about that when we come back from our break with my commentary. This is Bubba's Bottom Line, Todd Bubba Horwitz, and of course, I want to remind you to check out our highschoolinvesting.com site. That's go to patreon.com/Bubba Trading if you want to help, and you can check out highschoolinvesting.com. And for those who help us at certain levels, we're going to actually give you access to learn something about the option and trading markets throughout there. It's almost like a free education. So go to patreon.com/Bubba Trading and check that out. In the meantime, don't forget to get the Bubba Show every single day from 2 to 3 Eastern Time at libertytalk.fm. And we're going to step out here for a break and be right back. Welcome back to the Bubba Show. Todd Bubba Horwitz with you. And of course, this is Bubba's Bottom Line, not the Bubba Show, but what can I tell you? Anyways, so I asked you a question before we went to the break, and I said, well, what do you think? And I believe that what we are seeing with the cryptocurrency world is the start of a financial revolution. I believe that many people out there are so disgusted with the act of the Federal Reserve. They're so disgusted with the way that we get overtaxed, with the way that we've got all of these problems and all of these issues that have been really created by the pounding of the dollar, by the Federal Reserve, by the manipulation of currency, by the currency wars throughout the globe, that is really what is driving the crypto space higher, okay? I think that was the origination of it. I think that is what's going to help it take hold, is that the overall individual is tired of getting screwed by the Fed and by their ability to go ahead and print money at will and to do what they want to do with the monetary system. In other words, if it comes down to it again, will the banks be too big to fail again, and will they take them out? So I think that this is the start. You know, we always said here that we felt there was going to be another revolution at some point in time. I didn't think it would be a gun revolution, because obviously it's a little bit different than it was when they were shooting muskets off. However, I do believe that the crypto space is the start of a financial revolution. And of course, if you remember Trading Places, how do you hurt rich people? You make them poor people. And I think if it takes hold, and again, I don't know if that it will or not, but if it really takes hold, this will put a damper on the Fed and everything else that they do, and it will do some damage to the people that have taken advantage of the middle class for 104 years. And that is the Fed, the big banks, and the government. Because what they've really done is they've destroyed the value of what you own, and they have the ability to destroy that value as you own it. They can offer, as I've said many times before, a secondary on the cash that's in your pocket. All you have to do is devalue it, force up inflation. So if you had 100 and something you wanted to buy was 50, well, now the thing will be 100 anyway. So what difference does it make? So I think the answer to my question is yes, this is the start of a financial revolution. I think that we've seen, you know, Ron Paul's been on it for years, and many others who've either gone to gold or to Bitcoin or to whatever, and now we see other things happening. So I think this is the actual start of a financial revolution, and we'll see how it plays out over time, because you can already see the governments around the globe are getting very nervous, and they're already talking about regulations and restrictions, and I don't know what they can do, but let's see how it plays out in the meantime. Everybody have a great Merry Christmas and a happy, healthy New Year. I certainly always appreciate you all. And with that, I will say Merry Christmas to all, and to all a good night. Bubba's Bottom Line. We'll see you later. Have a great one, everybody. Thanks.